supermicrocomputer has been a quiet force in the tech sector, but with its strong presence in high-performance computing and cloud infrastructure, could it be one of the most undervalued stocks of 2025? Let's analyze SMCI's financials, growth potential, and risks to determine if this stock is ready for a breakout. Despite its competitive positioning and revenue growth, SMCI remains underappreciated compared to industry giants. Investors searching for value in 2025 may find this stock worth considering. Before we dive in, make sure to subscribe to Stocks Telegraph for more market insights, and drop a comment below. Do you think SMCI is undervalued, or is it priced fairly? Supermicrocomputer is a leading provider of high-performance servers and cloud computing infrastructure. Founded in 1993, the company specializes in energy-efficient server solutions, scalable storage, and AI-driven computing, serving industries such as cloud services, enterprise applications, and data centers. SMCI has carved a niche in energy-efficient computing, a growing focus for companies looking to reduce costs and environmental impact. Competing against industry leaders like Dell and HP, SMCI differentiates itself through advanced AI infrastructure and cutting-edge server solutions tailored for big data, machine learning, and cloud computing. The company's financials reflect strong performance, with revenues surging 20% over the past year due to increased demand for enterprise computing solutions. However, despite its success, SMCI's market capitalization lags behind competitors, suggesting potential undervaluation relative to its growth trajectory. Like many tech stocks, SMCI has seen its share of fluctuations but has demonstrated resilience amid market volatility. As of February 2025, SMCI trades around $50, down 30% from its 52-week high of $70. While the stock has experienced pullbacks, it has still outperformed several sector peers during downturns. Valuation metrics suggest the stock could be trading below its fair value. SMCI's PE ratio remains significantly lower than the industry average, indicating that investors may not yet fully appreciate the company's potential. The PS ratio of 1.2 is also relatively low compared to competitors like Dell and HPE, further reinforcing the idea that SMCI is undervalued. Given the recent market performance and earnings reports, investor sentiment toward SMCI remains cautiously optimistic. With AI and cloud computing continuing to drive demand for advanced server solutions, the stock could be positioned for long-term appreciation. Despite solid financials and a strategic position in the tech industry, SMCI's valuation remains relatively low. Comparing its valuation to major competitors like Dell and IBM highlights a pricing discrepancy. For instance, Dell trades at a PE ratio of 15, while SMCI sits at just 9, despite comparable revenue growth. This gap could be due to market skepticism about SMCI's scalability and ability to compete with larger firms in the long term. Analyst sentiment has been increasingly bullish, with multiple firms raising their price targets for SMCI. Goldman Sachs, for example, recently adjusted its target to $70 per share, signaling optimism about the company's future. Analysts point to SMCI's foothold in AI and cloud computing as a major driver for future growth, though some remain cautious due to potential supply chain disruptions and competitive pressures. If SMCI continues expanding its market share and improving profitability, investors may soon recognize its true value, making this an opportune time to assess its potential. The demand for cloud computing, AI, and big data processing is booming, and SMCI is well-positioned to capitalize on these trends. As companies adopt AI-driven applications and advanced computing models, the need for high-performance, scalable server solutions will grow, directly benefiting SMCI. The company has taken steps to expand its reach, forming strategic partnerships and investing in new product innovations. A recent collaboration with a major AI startup has strengthened its position in the fast-growing AI infrastructure market, expected to see exponential growth in the coming years. By focusing on enterprise computing, cloud services, and AI infrastructure, SMCI is aligning itself with industry megatrends that are likely to drive long-term revenue growth. Despite its strengths, SMCI faces several risks that could impact its growth trajectory. The competitive landscape in the cloud computing and server industry is intensely crowded, with tech giants like Dell, Lenovo, and HP dominating market share. While SMCI has distinguished itself in high-performance computing, it must continuously innovate to maintain its competitive edge. Supply chain risks remain a significant concern. The ongoing semiconductor shortage and global economic uncertainties could delay production and increase costs, impacting profit margins. Additionally, geopolitical tensions and potential tariff increases could create further obstacles for SMCI's global operations. Another risk is technological obsolescence. As AI and cloud computing evolve rapidly, SMCI must stay ahead of innovation trends to remain competitive. If newer disruptive computing models emerge, the company could lose ground to faster-moving competitors. While these risks are manageable, they highlight why investors should monitor SMCI's ability to adapt to changing market conditions. SMCI has received generally positive ratings from analysts, with an increasing number of firms recommending it as a buy. Jefferies and Credit Suisse recently raised their price targets, citing strong demand for AI-driven computing and enterprise server solutions. The consensus price target for SMCI currently sits at $70, indicating a 40% upside from current levels. This reflects growing confidence in SMCI's expansion into new markets and its ability to capitalize on cloud computing growth. While some analysts remain cautious due to valuation concerns and market volatility, the majority agree that SMCI's strong fundamentals and favorable industry positioning make it a compelling stock to watch. With solid growth potential and an attractive valuation, SMCI presents an intriguing investment opportunity. Its relatively low stock price compared to competitors suggests that it may still be undervalued, especially considering its position in AI, cloud computing, and high-performance infrastructure. For investors looking to enter the stock, price levels around $50 to $55 could present an attractive buying opportunity based on historical support levels. However, key events such as upcoming earnings reports and major product announcements could influence stock price movements, offering alternative entry points. While long-term growth prospects appear strong, investors should weigh potential risks related to supply chain disruptions and competitive pressures before making a decision. Supermicro Computer Incorporated offers strong growth potential thanks to rising demand for AI-driven computing and cloud infrastructure. Despite some market skepticism, analysts remain bullish on SMCI's future, with several raising their price targets and predicting significant upside. While competition and supply chain challenges remain concerns, SMCI's commitment to innovation, energy-efficient computing, and international expansion position it well for sustained growth. If the company continues executing its strategy effectively, investors could see substantial returns in the long run. Do you think SMCI is ready to unlock its true value in 2025? Drop your thoughts in the comments below, hit that like button, and subscribe to Stocks Telegraph for more stock insights. Share this video with anyone interested in undervalued tech stocks and investment opportunities in high-performance computing.